Thoughts? Worried? No.
From an economic perspective, not worried.
Okay.
These $50 billion tariffs will have only 0.2, 0.3% impact on China GDP growth, so we're not particularly concerned. From a growth perspective, clearly there is a substantial impact from a market sentiment side, but we're more focused now, David, on the signs and evidence of a re-acceleration in global growth. You've seen it in the China PMIs, the European PMIs, the US PMIs, the UK PMIs. And that, for us, is a more powerful story as far as risk is concerned into the second half.
The earnings story, though, I mean, just to pivot back to that, because we have seen very, very small signs, admittedly, that whether it's several car makers, you have a company here and there, they're starting to warn that they might start slashing their profit forecast. Is that something that you see, I guess, evolving meaningfully and eating to EPS growth estimates ahead?
Well, we're looking at EPS growth estimates for the US for this quarter,
okay,
and are seeing expectations of between 20 and 24%. So at least from a US earnings perspective, the picture looks very strong indeed. Now, if this is to metastasize in terms of a migration or an escalation from, say, 50 billion to 200 billion, then I think it's fair to say all bets are off, because at that point the global supply chain starts to be threatened, and the dispute becomes a lot larger than it currently is. I tend to the view that there's clearly a relationship between presidential approval polls and, frankly, promoting this dispute. I suspect also that once it starts to bite at the domestic level, there will be a clear move to back away and negotiate. You know, the General Trump strategy seems to be to push as hard as you can get, and then when you think you have achieved that, to back off. And I think that's what we will probably see now. Otherwise, there's a clear path to mutually assured destruction, and I can't see how that's going to benefit him in the midterms.